Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 9th of the 8th to Friday the 13th of the 8th 2021. Basically we've written up the weekly flows over that period. Save time. We're going to start this video as we do the analysis, so let's make a start then. So the weekly flows for Monday the 9th to the Friday the 13th then. Euro dollar plus 31, so over that period the euro dollar as an FX pair gained 31 or pips or points. Euro yen minus 41, euro pound plus 22, pound dollar minus 7, pound yen minus 112, and dollar yen minus 71. If you plug that into the model, the formula, you get a positive opposed driver in the yen at plus 224, front and back door flows mainly coming out the pound at minus 141, out the dollar at minus 95, and the euro was the positive rock, at plus 52. Activity plus or minus 236. Right, so over the week then we had a positive yen driving, and the main loser was the pound, next the dollar, and the euro had a little bit of backdoor strength at plus 52. Right, we'll stop it there and then we'll carry on the analysis. Don't go away. Right, welcome back then. Just to remind you then, basically Friday, which was the last trading day, which was Friday the 13th, the dollar was the negative unopposed driver, minus 204. So it was basically it was unopposed, and the dollar weakness was driving the market, and it was driving it mainly into the yen at plus 141, into the euro at plus 58, and the pound was the positive rock at plus 5. So Friday we had this massive dollar strength off the back of this Michigan consumer sentiment data miss, or perceived miss, excuse me, and over the week we had yen driving in a positive manner. So we had Friday we had this big sell-off in the dollar. Over the week we had yen strength and pound weakness predominantly. Right, so and last week, which was the 2nd of the 8th to the the 6th of the 8th, we had the euro was negatively driving and the dollar was the positive secondary driver. So that gives a bit of context. What's going to knock it about next week? Well, Sunday the 15th we've got JPY GDP. Monday the 16th we've got China retail sales. Tuesday the 17th we've got Reserve Bank of Australia minutes, GBP claimant counts, Euro GDP, US retail sales, and Wednesday we've got the New Zealand rate decision. So it's actually a busy start to next week. Unusual. The week we've just had basically was a relatively light day today. Data week, and the days were light, and we're kicking off with a bang next week, so that's something to bear in mind. Right, so let's have a look at the asset classes. The dollar index then, so I had this big pump up, it had a double top, and it's now 0.20, 20% from the modelled high. So the dollar's strong, but it's come back a bit off the back of this so-called Michigan consumer sentiment and we had that big sell-off on the Friday. Gold then should like that to a certain extent, and but it's still only 0.45 from the floor, so it's not even half marks yet. So gold is just shows you how much gold got sold off. Oil's coming up, but it's still 0.242 from the floor. So it's still relatively weak, not even half marks. And then Wall Street. Equities have been the big gainers this week. We've got this. It's just sub the high. The S&P is actually at more or less at the high, and the tech is just sub the high on breakouts. So strong equities. US 10-year. Then you had that big pump up in price, which means yields were coming off. Then the yields came back a bit, and now yields are starting to come off again. Again, probably linked with this Michigan consumer sentiment. Bund, big pump up in price, soft yields, and again you've got this sort of bounce in price, and yields are coming off. But relatively speaking, US yields are it's 0.31 from the high and it's 0.14 from the high. So this is price. So yields are relatively stronger in the US than in Europe at the moment. Copper had that long period of just thrashing up and down. Then you had that big break, came right back again. It's now thrashing up again, down again. It's 0.42 from the floor. So copper's still relatively weak. US steel messing about for months. Then it's finally had this break. Probably off the back of the US infrastructure bill. Okay, so let's stop it there and do the final analysis. Right, we're off again. This is the combined data cycle and flow video. So this is the data cycle then, which is basically our model tier 1 and tier 2 data. It's our version of the economic calendar. Right, so China then. China data cycle is basically on the up. It's starting to show signs of recovery now, and it's been in the red for a long time. The dollar is mixed. It's got a negative tier 1, but a very positive tier 2. So on balance, it's small neutral with a big positive. Germany pretty much neutral. EUR starting to go neutral to negative, so not so clever there. The yen, JPY, neutral. The pound, neutral. The CAD is neutral to negative. The Australian dollar is neutral to quite negative. And the New Zealand dollar is still positive in the data cycle, and the Swiss is neutral to negative. So if we look at those, what have we got? Let's have a look. So we've got a positive China data cycle coming out. We've got a positive New Zealand data cycle. We've got a strong but distracted by tier 1. So you've got positive mix there, and neutrals to up to downs, the rest of them. So China's starting to look a bit perky. The dollar is mixed to positive still, and the New Zealand dollar is still pretty strong. And don't forget, we've got the rates decision coming out whenever it is. When is it? Wednesday the 18th next week. So that's something to bear in mind. Right. So let's have a look what we think is going to happen in the majors then. So we've got this dollar, euro, yen, and pound. Right. Start with the yen. Basically off the bat of the equity transmission. Equities are really pumped at the moment. They're at highs. Even the Nasdaq's come back up pretty much. So you've got this equity transmission, and if you look at the where is it, and the yen is for the period the 9th to the 13th, which is the week in question. The yen has been positively driving at plus 224. It's likely you're going to see, and last week the yen was minus 37. It was the negative rock, so it was static, and the yen's come up this week. So you're likely to see a reversal in the yen. So the yen's likely to be negative. There's elbow room for a fall off in the yen next week. The dollar, we had this big sell off on the Friday, and it was relatively soft over the week, and the dollar was pretty strong. So the dollar's got that sort of look about it. It's coming off. If you've got flows out of the yen, they've got to go in somewhere. The big loser was the pound, and last week it was the pound was pretty static. So these are the two, the euro and the pound are potential gainers next week. The dollar, if it carries on, will be neutral to negative. And the main driver then will be a negative yen. So it's dollar, euro, yen, pound. So you've got a negative yen, a neutral to negative dollar. So you've got flows out of those two, and you've got flows into either the pound or the euro. So as far as the commodity currencies, we'll have to see how the Asian flows go early Monday morning. So that's where we are. That's the scenario. We've got a busy data week as well, starting us off. So I hope you had a good trading week. We've been trading around call positions. The call positions have basically gone nowhere. It's a little bit worse, arguably, but we're making headway on the call positions, trading around them. Right, so I hope that was useful. Thanks for watching. See you Monday morning for the daily briefing.